Hello and welcome to Analyzing Finance with Nick. This is a special video today that I am going to be presenting the speech I made in Boston on September 20th as part of the 2025 Analyzing Finance with Nick tour. This speech was about the enrollment cliff and about how demographics are going to drive down the amount of college students matriculating across the United States for the next decade, and what that means for not only the economy of Boston and Massachusetts, but the entire US economy as a whole. And it just kind of, in general, influences my overall outlook on the economy of Massachusetts. The tour for 25 has wrapped up, but we're going to be having a bigger and better world tour for 2026. I strongly encourage you guys all to vote in the new form that I created, linked into the description and the pinned comment, so you can have some insights in where we go next year. We have two events in each city. One is a larger gathering like the one I had in Boston, and another will be a more curated experience with 6 to 10 people that is more one-on-one, whether it's a high-end restaurant, sporting event, or some unique experience dedicated to that particular city or location. I look forward to see you guys all next year. The first stops we have lined up are in Sydney and in Gold Coast, Australia in February, but there'll be more to come in the rest of the continents of the world. Thank you for watching, and let's get started with the speech.
Hello, everybody, and welcome to the Analyzing Finance Nick meetup here live in Boston, Massachusetts. I appreciate you guys all showing up. To create a speech that's more in line with the interest of the local community here, I'm doing one about the economic future of Massachusetts and Boston, particularly the idea of the enrollment cliff. How many of you are familiar with what the enrollment cliff is? Okay, so a few of you. The enrollment cliff is a sharp demographic-driven decline in the number of traditional college-age students, basically people aged between 18 to 22, that is a byproduct of low birth rates since 2000. Particularly 2008, birth rates really dropped below replacement and stayed down there. And 18 years from 2008 is 2026. And so you are going to be seeing a drastic decline in people who are college age, yet you still have the same amount of seats for a variety of schools. And on top of that, with recent political trends being more hostile to international students, you are going to probably see even less size of a student body. This is even excluding the whole political and cultural shift and people saying that college might not be worth it because it's too expensive. If you add those factors, it probably causes this even further, but there's going to be a considerable decline, as much as 10 and 15% by 2030 and possibly more after that, of people going to college. What does that mean? It has uneven effects. The Ivy League schools will probably be fine. MIT is going to be fine. The big state schools will probably be fine, the flagship. Basically, if your school is in a Power 5 conference for college football or the UCs, that's a good proxy of whether your school is going to hold up or not. But the smaller schools, like the second-tier state schools, the liberal arts colleges, or the smaller private schools that are bigger but don't have the academic prestige to justify their high price tags, are going to lose enrollment and students. And they're going to have to make major changes. Either they're going to merge with other schools in their area. This is probably the most likely outcome with the state schools because a state organization can't really go bankrupt. So you'll just merge, say, like two smaller schools, say like Cal State Dominguez Hills and Cal State LA would probably just merge their campuses. Or for private schools, they would shut down. Or for other schools, they would have who want to stay afloat and not shut down, they'll have to cut tuitions. And the OBBA, which is the Big Beautiful Bill Act, is going to magnify this because President Trump in that bill put a student loan cap. So the demand for graduate school is going to go down, not just in terms of number of young people who want to go to grad school. And if you think the economics of college are bad, look at the economics of graduate school. The amount of money they can spend because these schools are priced based on the maximum amount of people who are going to borrow, there's going to be less people able to borrow at those prices. So I think you're going to see college prices come down on the aggregate, or at least stay flat while inflation goes up, which is we have seen in the early 2020s. Like university tuition is well under the rate of inflation for the last several years. There's going to be a lot of financial strain for these enrollment colleges, as I mentioned before. They're going to have to fire faculty, cut back in programs. Some of these smaller, like mid-major schools in sports will probably have to turn off their sports teams. And there's going to be a labor market consequence. Fewer college graduates means potential shortages in high-skilled labor in the future, or more reliance on AI to supplement them. A lot of people think AI is going to disrupt and get rid of these workers, but that might not be so a bad thing because there may just be less workers there available anyway. And you also are going to see the college industrial complex decline. There's a lot of jobs in this economy tied to college, whether it's professors directly or admin or department heads or bureaucrats at the universities, but there's also SAT test coaches, college admission counselors. Boston is a nice city, but unless you're a real big fan of the Boston Tea Party, there's not that much tourism here for people who don't have friends or family going to school in Boston. It's going to affect a lot of people travel to visit their friends or their family. Like I've gone to several cities I wouldn't have gone otherwise just to go to family members' college graduations. There's going to be a decline in that, which is going to have an impact. If you look at the national economy, higher ed is about $700 billion, which is about 3% of the United States GDP. And a shrinking enrollment threatens not just local economies, but national economy as well. Like if the national economy, if we lose 1/3 of revenues for colleges, that's 1% off GDP. You won't see it in a given year just because this is a gradual thing, but education is one of the US's greatest exports, which is why I didn't like this random proposal to deport international students, because it's one of the ways we export cultural power to the rest of the world. It's also a big source of the economy in this country that provides a lot of relatively well-paying jobs and a lot of other adjacent things in the economy. Let's look at Boston specifically, because Boston is more correlated. Higher education is a huge weight here, as you guys all know. There's over 50 universities in Boston, most notably Harvard, MIT, but there's other ones like BC, Northeastern, Suffolk College, BU, etc. And then there's the UMass system, which is technically not in Boston, but the students are from this area. In terms of Massachusetts' total GDP, it's $638 billion. Boston alone is $168 billion. Educational services are about 15% of the state's economy. And if you just do post-secondary, it's about 7.5% to 10% of the economy. If you count all education and healthcare related employment, it's about 21 to 24% of all the jobs in this city. The UMass system has 40,000 jobs alone in Boston. And there are over 250,000 students who live in this city. So about 1/3 of everybody who lives in Boston is a college student or a graduate student, which is kind of crazy if you think about it. If that 1/3 of residents now is 20% lower, that's a lot less people in Boston. That's going to have a lot of implications for the economy here. The main anchors are Harvard and MIT. Harvard has a $6.1 billion operating budget, $51 billion endowment, 20,000 jobs, and 25,000 students. It contributes about $9 billion to Massachusetts' economy, a little over 1%. A lot of the industries that aren't necessarily university related, like biotech, R&D, like a lot of the venture capital and financial industries are dependent on Harvard and MIT. Without these elite universities, those industries wouldn't be here, because alumni want to stay in the area because they have good experiences going to those schools, or the networks, and we're trying to recruit the good talent that was going to MIT or HBS. It creates its own ecosystem. Without these elite Boston schools, Boston would resemble Baltimore or Philadelphia. It would still have a few key industries and it'd still have its old industrial past, but it'd be well past its prime. It'd be basically like a Rust Belt city on the coast, similar to those two. And the industry correlations to Harvard and MIT are pretty stark. 80% of the biotech and life sciences industry in Boston is here because of Harvard and MIT. For AI and robotics, it's 60 to 70% correlated, because a lot of the AI and robotics companies are spin-offs from CSAIL or HBS entrepreneurs or scientists who've done research at MIT. Professional services, 30 to 40% of those jobs, consulting, big law, eds and meds related things, that's all a byproduct of college. And then tourism, about half the tourism here is due to academic events whether it's Harvard graduations, whether it's academic conferences, etc. The Sloan MIT conferences and like for sports businesses, they're not necessarily all student related, but there's still a lot of academic research and intellectual exchange in the city. And let's compare it to other cities. Boston, like 6 to 8% of GDP is higher education, which is 6.8 times the national average for the role of college in a city. Let's compare like New York. New York higher ed is about 3% of GDP. In Los Angeles, it's about 4%, same with San Francisco. And then in other cities that have less colleges, it's even smaller. But it makes it very sensitive. I do like a sensitivity analysis. Let's just say there's a 10% enrollment drop. That's about 0.5% loss of GDP to this local area. If you have a 20% enrollment drop, it's about a 1% drop of GDP, $1.6 billion. If you have a endowment tax, which President Trump and a lot of politicians are opposing because a lot of these schools essentially become hedge funds who happen to have classes attached to them. And they won't have an opposing political agenda. So there have been proposals to tax endowments. If you had a 2% tax on endowments every year, that'd be a $2.2 to $2.8 billion loss. So that'd be another 1.3 to 1.6% of GDP. And if the prestige of university goes down due to some of the sociocultural factors that I'm talking about, that's another $500 million of losses of GDP. So the combined shock from the enrollment cliff could be up to 2 to 3%, which is the equivalent of erasing a year's worth of GDP growth. It's not the end of the world, but it does make a significant dent, especially for a city that's reliant on it. Why did Boston avoid the Rust Belt decline of other cities? Boston's kind of a miracle in that way. It has some of the same structures that built it up, like Cleveland, Pittsburgh, Philadelphia, Chicago, Milwaukee, and Baltimore. But Boston is able to avoid the fates of those cities for a lot of reasons. One, they had less industrial dependence. Their industries like textiles, shoes, and shipbuilding were the first to move overseas. So they had more time to adapt. Second, they pivoted the knowledge economy a lot quicker. The university's presence helped, but also Boston was kind of a leading city for some early industries, like venture capital started here before it was in San Francisco. They actually moved a lot of those companies like Gordon Moore and Intel to the Bay due to cheaper land to build factories, believe it or not. Which sounds kind of funny today, but that was kind of one of the initial drivers because Boston was too expensive to run a semiconductor plant. And the other thing too is that finance and mutual funds like Fidelity, State Street would be two examples, but also like John Hancock on the insurance side, Mass Mutual. Boston was a leading player in those industries and possibly the biggest player outside of New York City today. And so they had that industry and they had the VC and they had the academics. So they had the foundations to kind of become a post-industrial city a lot quicker than others. The question now is, will Boston continue to adapt? I think Harvard and MIT and probably BC and BU will be fine, but the rest of those schools are probably at risk, and the UMass system is probably at risk, and those schools will probably have to either increase their acceptance rates and or lower tuitions, and so it might affect the demographic who's going here, and they may not be as high income as previous too. So it's going to have an impact on Boston's economy. But the question is really, can Boston adapt? And if so, how they're going to adapt. Thank you guys for watching this speech. And now I'm going to take it to Q&A.